$44.8 billion for mayonnaise and mustard. Tell me consumer staples are boring.
Look at the fine print. McCormick is giving Unilever shareholders 55% of the new entity. This isn't an acquisition, Nate. It is a stealth takeover.
Oh, come on. Unilever gets $15.7 billion in cash to walk away.
Except they explicitly carved out their entire Indian market. You do not just forget 1 billion consumers.
So what is the actual recipe here? The rundown.
I'm just saying, if you're an independent wealth manager with more than 1 billion in assets, you probably have 3 private equity firms in your inbox right now.
Only 3? Your spam filter is working overtime? Carlyle just proved your point, taking a majority stake in MAI Capital and valuing the firm at over $2.8 billion.
And right next to that, Savant Wealth is snapping up Exential Wealth Advisors. That's a $6 billion RIA. The wealth management roll-up is just relentless.
Speaking of relentless, we finally have closure on the sweatiest deal of the year. Playlist and EGYM officially closed their $7.5 billion merger.
A landmark transaction for fitness tech, though I still want to see the retention metrics. Merging 2 giant hardware and software ecosystems sounds like an integration nightmare.
You're no fun. They're creating a wellness powerhouse. Just let the synergies flow, Maya.
I'll let the synergies flow when I see the EBITDA margins. Anyway, the real gossip this week is in the skies. Apollo is reportedly circling KKR's Atlantic Aviation. $10 billion.
Peak sponsor-to-sponsor behavior. KKR bought it, polished it, and now Apollo wants the keys to the private jets. It's a beautiful game of private equity hot potato. $10 billion is a massive number for flight services.
Is it though? KKR merged Atlantic with Ross Aviation just a couple years ago. They basically built a monopoly on parking spaces for billionaires. $10 billion almost feels like Apollo is getting a volume discount.
Oh, come on, a volume discount? They're paying $10 billion for gas stations with red carpets? You can't call that a discount?
Look at the cash flow. These are infrastructure assets disguised as luxury services. Apollo loves predictable yield. I actually think KKR is leaving money on the table.
I strongly disagree. KKR is taking chips off the table at the exact right time. Let Apollo deal with the next economic cycle. We'll see if they actually sign the dotted line by Friday.
We will definitely be watching the wires. But honestly, $10 billion for private jets is pocket change compared to what we're chewing on next.
The spice must flow. McCormick is dropping $44.8 billion to carve out Unilever's global foods business.
Except for India.
Right, the very mysterious India carve-out. I've been reading the regulatory filings on this mega merger all morning, and we really need to talk about where that $15.7 billion in cash is actually going. The big one. $44.8 billion for mayo and bouillon cubes. I know grocery inflation is bad, but that is one hell of a checkout receipt.
It's exactly the kind of mega deal everyone assumed was dead. McCormick is swallowing Unilever's global foods business. Well, mostly swallowing it.
Right. So Unilever gets a $15.7 billion cash injection, and their shareholders end up holding 55.1% of the new combined entity. From a banking perspective, I love this structure. It's so clean. Unilever gets to slim down, focus on soap and skincare, and McCormick becomes the undisputed king of the pantry. It's a brilliant, pure play pivot.
I'm not buying the brilliant narrative, Nate. Did you actually look at the timeline on this?
They're targeting mid-2027, which is fine.
3 years. 3 years to close a consumer foods deal. That's an eternity in M&A. You don't put a 2027 target on your press release unless your lawyers are already actively sweating the antitrust reviews in about 12 different jurisdictions.
I think you're being way too cynical. It's a massive global transaction across dozens of markets. They're just managing expectations.
Oh, come on. It's not just the timeline. Look at the geography. They explicitly carved out Unilever's Indian food operations. India is entirely excluded.
Which makes total sense financially. India has massive growth potential. Unilever probably wants to spin that off locally, do a separate IPO, and capture the premium themselves. Why give that upside to McCormick?
Or they know the Indian regulators would instantly block a foreign spice conglomerate from taking over their domestic food supply chain. I was reading the footnotes on the regional revenue splits. India was a huge growth driver for Unilever Foods. McCormick is paying a premium for a global portfolio, but leaving the absolute fastest growing market sitting on the table. That is a concession, not a strategy.
Okay, fair point on the India gossip. There might be some regulatory walls there. But you have to admit, giving Unilever shareholders a 55% stake keeps them invested in the upside. Plus, $15.7 billion in cold hard cash is a massive win. Unilever can pay down debt or go on their own buying spree.
The cash is the only part of this I actually like for Unilever. They get to walk away heavy. But I'll take a bet right now that this doesn't close as cleanly as they claim.
I'll take that bet. I think it sails through by late 2026.
I'm putting a calendar alert for June 2027 just to mock you when they're still arguing with European regulators over mustard monopolies.
Deal. Speaking of massive numbers and people walking away heavy, KKR is looking to pass the keys to some private jets over to Apollo.
$10 billion for Atlantic Aviation.
Sponsor-to-sponsor handoffs are officially back, Maya. Voices. I'm looking at a note from a major desk this morning calling the McCormick and Unilever deal a, quote, massive strategic pivot toward pure play consumer segments.
Oh, please. Pure play is just banker speak for we finally found someone to take this off our hands.
You don't think $44.8 billion buys a strategic pivot?
I think $15.7 billion in cash buys Unilever a lot of breathing room. That's the real number. Plus, look at the footprint. They explicitly carved out the Indian food operations. You don't leave India on the table if this is truly a global strategy.
See, the rumor mill is going crazy over that India carve-out. I talked to a guy yesterday who thinks Unilever wants to do a localized spin-off. The multiples over there are ridiculous right now.
You actually buy that? I'm betting it's a massive antitrust headache. Local regulators would have chewed up a foreign mega merger of that size. Unilever just wanted a clean path to close by mid-2027.
Mid-2027 isn't exactly clean, Maya. That's a lifetime in deal years. But fine, let's talk about a deal that actually closed. Analysts are calling the Playlist and EGYM merger a landmark transaction.
$7.5 billion for fitness tech. I guess getting sweaty is recession-proof.
Cements a new era of consolidation. Their words, not mine.
It's a big number, sure, but I'm way more interested in Apollo circling KKR's Atlantic Aviation. $10 billion for private jet terminals.
Now that's my kind of deal. A heavyweight sponsor-to-sponsor handover. KKR passes the keys to Apollo, everyone collects a fee, and the private jets keep flying.
You're smiling just thinking about the pitch decks.
Totally guilty. We need to watch the wires tomorrow. If KKR and Apollo sign the dotted line before the week closes, it completely changes the Q3 sponsor volume.
We'll be tracking those filings. Speaking of massive numbers, wait until you see what Carlyle is doing in the wealth management space next. Spill the tea.
So we are really just passing the $10 billion private jet parking lot back and forth now?
It is peak private equity. Apollo circling Atlantic Aviation to buy it off KKR.
$10 billion. For fixed base operators, they are literally just gas stations with nicer coffee for billionaires.
You say that, but the margins on jet fuel for Gulfstreams are ridiculous. And KKR has squeezed a lot of juice out of this asset. The real question is why Apollo wants to be the one holding the bag at a $10 billion valuation.
Because they have dry powder burning a hole in their fleece vests, Maya. It's a classic sponsor-to-sponsor handoff. KKR gets to show a massive win to their limited partners, and Apollo gets to deploy capital into a business with a huge moat.
A moat, right? Until corporate travel budgets get slashed. I am not buying the $10 billion price tag.
Spoken like a true skeptic. Okay, fine. Let's talk about something where you actually read the footnotes. The McCormick and Unilever mega deal. $44.8 billion.
I did read the footnotes, and the juiciest part is what they are leaving out. Unilever is explicitly carving out its Indian food operations from the sale.
Which makes total sense. India is a massive growth market. Unilever wants to keep that golden goose. I bet we see a localized spin-off in a year.
Oh, come on, Nate. You really think they just decided to hold on to it for the upside? Look at the antitrust environment over there. The regulatory hurdles in the subcontinent would have tied this deal up in court until 2030. They carved it out purely to save the global transaction.
You always assume it's the lawyers ruining the fun. I am telling you, it's a pure strategic play. They will spin off the India business and make a killing.
We will see who is right when the global antitrust watchdogs start ripping into the rest of this $44.8 billion pie tomorrow.
Speaking of tomorrow, we also need to see if Apollo and KKR actually sign on the dotted line before the weekend. Tomorrow's radar.
I am refreshing the regulatory wires all day tomorrow. This $44.8 billion McCormick and Unilever mashup is going to be an absolute nightmare for antitrust watchdogs.
Honestly, the smartest part of the structure is carving out the Indian food operations. It makes the narrative so much cleaner for the global regulators.
You actually believe that? Come on. Excluding India isn't about a clean narrative. It screams hidden regulatory hurdles. They just didn't want a global mega deal stalled indefinitely in New Delhi.
Okay, fair. They took the path of least resistance. Speaking of resistance, I am watching to see if KKR and Apollo actually sign the dotted line on Atlantic Aviation by Friday.
Ah, yes, the $10 billion handover. Because if there is one thing private equity guys love trading with each other, it is a massive fleet of private jets.
It is peak Wall Street. We will see if the ink dries before the weekend.
We will be here to read the footnotes when it does.